Hello, everybody, and thank you for joining me today. It's Allan Barry Laboucan from the Rocks and Stocks News Show. It's around 7:15 on Sunday, July the 13th, and got a real special show for you today. Last Sunday, I did a video report, and I spent a fair bit of time on why I think we're in the start of a new metals bull market that will be rival or surpass the last one, which was in 2001 to 2011. And I also talked about some of my top picks. Today, I'm going to do it a little bit differently. I'm going to again start out with a short intro on why I think that we're at the early stages of a metals bull market with some of the indicators that that's happening. And then I have a big report with all of my picks, my current picks. And also, I'm having uh, a written report along with this video that you'll be able to find on the whole thing, the video and the written report on my Substack at Substack dot or rocks and stocks dot substack dot com. Once again, that's rocksandstocks.substack.com. I'll also be posting the report on Twitter, and I also have a link in that written report to my new WhatsApp group for the Rocks and Stocks News. And that's turning into a really great forum where me and the group talk about rocks and stocks and what's sort of breaking during the day. So I invite you all to join that WhatsApp group again. You can find that on my on the Substack dot or sorry, rocksandstocks.substack.com. Alrighty. So, as I said, last Sunday I did a video report with a group of my top picks that was very well received. So that's why I'm changing it up a little bit, little intro into the metals and then on to the picks. I think we're at a very magical time in the mining sector as we are seeing in real time the start of a new metals bull market. The last one was from 2001 to 2011, and this new one is well positioned to last longer and be more powerful. As is the case in metals bull markets, gold leads the show, if you will. Then silver, copper, and other metals join the party as well as the metals stocks, and those things are all happening now. In early 2024, uh, gold had an important breakout over here that you can see where it broke above 2100 and has been going from the lower left to the upper right of the chart since. Along the way, it has made a series of record highs. All of these are record highs. These. Um, and throughout 2025, and I think it will continue for years into the future. Recently, silver had an important breakout. As you can see here, I'm going to go back to a weekly chart because it'll show you how important this breakout is. So this goes back to 2018. And as you can see, since 2018, it had not well, it had touched above 3,500 one time. And recently it's been making a very significant breakout. And here's the monthly chart. Now, this goes back to 1994. So it doesn't go to that 79 and 80, 81 bull market or run. But as you can see again, it has spent very little time above 3,500 just for about a handful of months in that 2001, 2011 bull market. So this is a very important breakout right here, and it's doing up again today, up to 0.31%. Um, and I think that after it, uh, and I think it's primed to jump above $40 very soon and take a run at its record high of $50 per ounce this year. After it gets above 50, it will make a move much like gold did back here when it broke out and made that series of record highs. Uh, Two key factors that will drive it higher are its monetary metal, like gold, and the second is that it is crucial in solar panels. Demand for solar panels has caused a deficit over the past 4 years between physical silver mined and the physical silver demand. This deficit has been filled by above ground sources of silver, but those sources are running out, and the silver mining industry is unable to increase production. Demand for silver as a monetary metal and for solar panels makes silver a coiled spring that is primed to go much higher for many years into the future. Better get silver back up there so you can see that breakout again. Now I'm going to go to copper. Um, Copper has also recently went through an impressive breakout when it got above $5 per pound. Then, when President Trump announced a plan to impose a 50% tariff on copper imports to America, it blasted off to record highs. So, as you can see here, this is when President Trump announced a 50% tariff that he wants to put on starting on August the 1st, and it blasted off, and it's maintaining a good chunk, most of that gain. The real gain was about to here, which is $5.67, and it's only about 9 cents below that as I speak right now. Um, let's see here. Okay. It would shock me if Trump actually goes ahead with this tariff, but you never know with him because America only mines around half of what it consumes. So the tariff would be a very big tax on American end users of copper. What he did highlight is how tight this copper supply chain is. And even though Trump wants to see more dramatic domestic copper mines take years to turn on. Even with the tariff, new American copper mining won't start until after he leaves office. The entire global supply chain is broken. The global copper supply chain is broken as the world is primarily depending on very old mines that were found decades ago. In the past few decades, the discovery of new copper mines have fallen off a cliff, and even the minimal amount that have been found are lower grade than the old mines and require going deeper into the ground to mine them, which is why the cupboard of new copper mines in development is bare and unable to replace the old mines. This is all happening when the demand for copper is growing dramatically for upgrading old power grids in developed economies and to build new ones in developing economies. Plus, from advancements in the technology industry, electric vehicles, artificial intelligence, and in the not too distant future, robots. Copper has made an important breakout. Oh, yeah, there I got it. Copper has made an important breakout to new record highs, and I see more of that coming based on the broken supply chain and dramatically growing demand. Platinum, bring that up. Platinum has absolutely blasted off in 2025, and palladium has also made an impressive breakout. These metals were left for dead until recently because of the belief that among many that electric vehicles would take over the world and eliminate internal combustion engines. But as is often the case, the hype doesn't live up to the reality. Of course, the global market share of electric vehicles is growing at an impressive rate, but they have hurdles such as the cost, not enough infrastructure of charging stations to make it as convenient as gas-powered vehicles, and the time it takes to charge them. I'm going to bring the palladium chart up here. And as you can see, it has also been performing very well. Another factor that is not talked about often is where will the energy come from if the world switches to electric vehicles? Power grids in many developed economies are already strained. Can you imagine what would happen if everybody in California owned an electric vehicle and came home from work, then plugged in to recharge? It wouldn't just cause a daily blackout, it would cause a catastrophic failure of the entire power grid. The world is not prepared to transition from gas powered vehicles to electric vehicles when it comes to energy sources. And to build everything out, we'll need a lot of copper that the miners will struggle to provide, which means the gas powered vehicles will be used for decades into the future, and they need a lot of platinum and palladium. Go back to platinum. Uh, they need a lot of when platinum and palladium were left for dead, it devastated the supply chain, and now the reality is setting in that gas-powered cars and hybrids aren't going away. The supply and demand equation is very bullish for platinum and palladium. There's a palladium. That's a really nice cup there. And I think that's, from a technical perspective, looks very bullish. The trend in gold, silver, copper, platinum, and palladium are telling us clearly that the new metals bull market has arrived. The supply chains of all these metals are strained. Miners aren't able to increase production, and the pipelines of new high quality mines and explorers with important discoveries can't fix the broken supply chains. It takes many years to discover a mine, then build it, and this means the supply chain will stay broken for a decade or two, maybe even longer. The best ways to play the bullish trend for metals are through the miners, developers, and explorers. They have in the ground what the world needs, but the supply chains for them have been underfunded for much too long, and the stocks are trading at or near all-time low valuations. The new metals bull market is upon us, and the metal stocks are at a magical point that we'll see plenty of them grow in ways that overwhelms current metals bulls and bring in generalist investors from all over the world. When the generalist investors arrive, and they are starting to, they will find a small menu of miners, developers with high quality projects, and explorers with important discoveries. This will be very powerful for the metal stocks. Next, I'll present my current top picks in various categories and metals. The first group that I'm going to start out with is the major mining companies. And these are my major gold miners. When it comes to the major gold miners, since early 2024, so I got this stretched out a little too far actually. Here, so back here in early 2024, they had, I'm just going to get rid of one of these. This 20 days, a little too short of a term. There. So it had its had its golden cross back here. And when it comes to the major gold miners, since early 2024, my top pick has been and still is Agnico Eagle Mines. As you can see in the chart here, when I picked them was way back here when they were trading at around $47. They're currently trading at 119. So they've done their job in outperforming gold and the GDX. They're a free cash flow machine that is piling cash onto their balance sheet and at an impressive pace. They are also increasing their production and have exceptional controls on their costs of production and are having no problems at replacing what they mine. In late July, they will report their second quarter, and it should be their best ever, as gold had its best average price ever for a quarter. Of course, another key catalyst is the performance of gold. If it goes up like I think it will, then this will also be very good for their bottom line and stock price. This is sort of a cornerstone type of a situation for investors that want exposure to gold, but they want some added torque. And as you can see, the price of Agnico has significantly outperformed gold and the key index that to compare it against, which is the GDX. All right, the next company, my only other major mining pick is Newmont. We'll go to Newmont on the NYSE. Okay. So Newmont is up nicely since I made them a pick at the beginning of April. So right around here when they were trading at $47 a share, and now they're trading at 60. One of the reasons I made them a pick was because they had been underperforming their peers since gold broke out above 2000 in early 2024 and felt their corporate moves would be very positive for their outlook. They sold off non-core gold mines and fully digested the takeover of Newcrest. The sales of non-core gold mines went much better than they expected when they first put them up for sale. They thought they would get 2 billion. They ended up getting 4 and change billion. So definitely was a good series of transactions for them. Plus, the Newcrest acquisition has been fully integrated into Newmont. Though these corporate moves give them the opportunity to focus on optimizing their tier one gold mines. Additional reasons I like them is they are a household name when generalist investors think of major gold miners, and they make up around 12% of the GDX. If they perform strongly, it gives generalist investors confidence when they look at gold stocks. I call it the Newmont effect. So I argue that this is bullish for gold stocks in general and Newmont's stock price. All right. So that's all of my major gold miners. I only have two, and I picked them because I think that they will outperform gold and they will outperform the index. There's no sense owning an index when you could, because you get the good, the bad, and the ugly. And by focusing on the best, you can outperform the index. And I think that's exactly what Agnico Eagle and Newmont will do. Okay, so now I'm going to go to Alamos, which is my top mid-tier pick. I'll also go to the New York Stock Exchange listing. So this is in US dollars. All right. So mid-tier gold miner picks. Oh, I think I said pick and I meant picks because I have two of those. All right. Alamos Gold is not nearly as well known as Agnico Eagle and Newmont when it comes to generalist investors. But for a mid-tier, although much smaller than Agnico Eagle, they have a similar story when it comes to the key metrics important for a gold miner. They are performing very well with free cash flow growth since I first started covering them in early 2024. So that was back here when they were trading at about $11 a share. Now they're trading at 26 and change. They are producing gold well below the average cost of their peers. Plus, they're having no problems increasing their production while also replacing what they mine. Even this is a key metric that I look for in gold miners because they're always depleting their mines. So they need to replace them, and that's why that's a key metric for me. Even though they already produce gold at a low cost, they have new mines coming on stream that will bring their cost of production closer to $1,000 an ounce. So if you believe like me that gold is going up much higher, even if it only traded at today's price, they're making a very handsome profit margin. Like Agnico Eagle, they have significantly outperformed the price of gold since gold broke out above 2000 in early 2024. With their increase in production and lowering their costs to be the envy of most gold miners, they are in a fantastic position for impressive performance for years into the future. All right. And my other uh, major or mid tier is Orla Mining. All right. Let's go to their listing on the Toronto Stock Exchange. So this is in Canadian dollars. Now, I started picking them way back when they were about $3 a share, or somewhere right about in here, a couple bucks, 2.5 bucks, somewhere in there. And now they're trading at 15. So it's been a great pick. And I said, or in this report, Orla Mining has been a pick since they were in the development discount window of the Lassonde curve. What added to my confidence was that Pierre Lassonde was a substantial investor since then and still is. They are a perfect example of why investors should pay attention to the sweet spot just prior to bringing a project into production and then climb up the right side of the Lassonde curve. There's two key peaks in the Lassonde curve. One's on the left side when a company makes an important discovery. The other is on the right side when they bring a discovery into production. Um, what fueled the climb for them was their Camino Rojo mine in Mexico, which is a low-cost gold mine. Their guidance is for 280,000 to 300,000 of gold production in 2025, with an all-in sustaining cost of $1,300 to $1,500 per ounce. With gold at 33, 34, that's a very nice profit margin. This puts them below many of their peers for the cost of gold production and a very high profit margin. Another event that added uh, fuel to the fire of their strong stock performance was the purchase of the Musselwhite gold mine. So now I'm going to zoom back in closer here. I'll go back to uh, show you early 2024. All right, so they had a really good run in here. And that was because of the Musselwhite, that was the purchase of the Musselwhite gold mine from Newmont. They have done a great job of using the success at their Camino Rojo project as a foundational gold mine to then also acquire two other projects, one in Nevada and the other the Musselwhite mine. In addition to being a consolidator and having low-cost gold production, of course, a higher gold price will be very good for their balance sheet. All right. So now I'm going to go to junior gold miners. Now, many people talk about juniors as anything under a mid tier. I'm specific in that I talk about junior gold miners. These are juniors that are, in fact, gold miners. And so that I have two of those picks. One of them is Borealis Mining. Okay, so let's go to Borealis's chart. As you can see, they only started trading in August of 2024. So they're a brand new company, public. Borealis Mining is in the early stages of becoming a Nevada-focused junior gold miner. They are beginning this journey by contract mining the stockpile at their Borealis mining and loading it onto the leach pad for a gold recovery through their ADR plant, which is up and running and is fully permitted. This will keep them busy well into 2026, at which point they are planning to start mining material from the past producing open pits that are also permitted on their mine. They would need some amendments to those permits, but they're past producing open pits. So that generally goes quite quickly in Nevada. Uh, Another important effort is exploration to find new deposits to mine. I'm very excited about their exploration potential because they have a huge alteration zone that is underexplored. The companies that had the project in the past focused on the known deposits and did very little exploration. It was all focused around the known pits that they were mining. When metals bearing fluids hit the country rock at the surface, they chemically alter that country rock and leave an alteration zone. At the Borealis mine, they have one of the largest alteration zones anywhere in Nevada, which suggests that there is a powerful gold mineralizing system that is wide open for exploration. In fact, that alteration zone is 20 square miles. It's huge. They have a dual path for growth at their Borealis mine. One is to ramp up gold production, and the other is with exploration. All right, that's the Borealis story. Next, I'm going to go into my other junior gold miner, which is McEwen Inc. And this is their stock on the New York Stock Exchange. I originally started featuring them in the reports back here and doing interviews with Rob McEwen when it was down around $3 and three and change. Now it's at pretty much $11, 10.97. All right. So McEwen Mining is a junior gold miner that will produce around 130,000 ounces of gold in 2025 and then increase production in 2026 and beyond. Plus, they have one of the best undeveloped copper projects worldwide, which makes for a tremendous value proposition. Recently, they broke ground on their stock mine, which will help them increase gold production in 2026 and also bring down their cost of production. In addition, they are spending a lot of money on exploration at their projects in Ontario and Nevada and having great success with their drilling. This will help them to replace the gold they are mining, increase their production, and bring down their cost of production for years into the future. Recently, I did an interview with Rob McEwen to discuss gold, copper, McEwen Mining's value proposition, and efforts they're making to unlock shareholder value. And if you go to my Substack at rocksandstocks.substack.com and look for this report, you will also find the written report that has a link to that recent interview with Rob McEwen. And they have plenty of catalysts for their copper project as well, which includes they're doing a bankable feasibility study and they're looking at taking the company public. So this is just a catalyst rich company when it comes to McEwen Mining. All right. So the next group of companies are the these are my developers with high quality projects. So I think I have three of those. Yes, three. Okay. So Amex has one of the best development gold projects in Canada. What stands out the most is their high grade zone called the Champagne Zone. It currently has a resource of 831,000 ounces of gold with an average grade of 16.2 grams per ton of gold in the measured and indicated category, with another 128,000 ounces gold in the inferred category at a grade of 9.83 grams per ton of gold. Finding resources like this, high grade, is very difficult these days. And to find one that has nearly 1 million ounces of gold, 831,000 at 16.2 grams, is quite exceptional. Their total resource in all zones is 2.3 million ounces of gold, and all their zones remain open for expansion, and they have several other targets on their Perron project, which is in Quebec. It is very rare for a project to dramatically increase the ounces of gold and grade when converting from inferred to measured and indicated resources. But that is exactly what happened with their Champagne zone. It has a unique high grade continuity for an orogenic gold system, which starts right at the surface and continues beyond 1,000 meters of depth. I think the total depth is 1,200 meters or something like that. Now, as you get deeper, it has not been drilled off to the same degree as, let's say, the first 700 meters or so. So there's plenty of room to grow that. Uh, as I say, it remains open to add to the resources. There are very few high grade zones like the Champagne zone anywhere in the world, and it has the potential to be a long life, high grade underground gold mine. They have a great game plan to advance the Champagne zone by starting with the bulk sample and also doing a preliminary economic assessment focused on toll mining the Champagne zone, and using the profit from that to then build their own mill at Perron. They are in a region with several gold mines that could toll mill their material, as it is such high grade that it could be blended in with lower grade material. That's great for the mills that are in operation around them. They are on a path that could see them become a near-term gold miner of very high grade gold with a low cost and a high profit margin. All right. So now I'm going to go to Generation Mining. Here's their listing on the Toronto Stock Exchange. So this is in Canadian dollars. As you can see on their stock chart here, they recently went through a golden cross, and that has a lot to do with the fact that they have palladium and platinum in their deposit, um, um, which is why it's had this important breakout. Plus, they've got all their permits to build a mine. So I said about them in this written report. Generation Mining has all the permits in place to advance their marathon project toward production. It is a copper, palladium, platinum development stage project situated in an ideal location only 10 kilometers from the town of Marathon, Ontario, with the Trans Canada Highway and power running right through the project. The estimates are for it to produce 168,000 ounces of palladium, 42 million pounds of copper, and 38,000 ounces of platinum per year. It has an after tax internal rate of return of 27.6% and a 1.9-year payback of the capex in their 2025 feasibility study. With the powerful moves in the price of copper, platinum, and palladium, the numbers are only getting better. There are very few shovel-ready copper, palladium, platinum permitted projects in North America or anywhere in the world for that matter. And this one is owned by a junior. Investors that want exposure to a copper, palladium, platinum development project have very few to choose from, which puts Generation Mining in a great position for growth. All right. My next uh, is Vizsla Silver. This is a phenomenal story, and I'm going to put their Canadian listing on the chart right now. And okay, so Vizsla Silver is in an enviable position with a high-grade silver gold development project with remarkable numbers in its preliminary economic assessment. In parentheses is PEA, which is the abbreviation of preliminary economic assessment. Using the base case numbers, which utilized much lower prices of silver and gold than the current prices, it has an 85% internal rate of return, or IRR, and a 9-month payback of the capital cost to build their Panuco mine in Mexico. Using current prices of silver and gold, the internal rate of return jumps well over 100%, and the payback drops to less than 6 months. Those statistics are practically unheard of these days, which is a key reason that they pretty much already have all the cash they need in order to build the mine in their bank. In addition to having exceptional statistics for their project, they also have a strong team of people involved, including Simon Smirlik, who led the team that built the Las Chispas mine for Silvercrest. My readers and audience will remember Silvercrest because I picked them when they were in the development discount window of the Lassonde curve. They had great success and ultimately were bought out this year for significant multiples from when I first started picking them. Las Chispas is a direct analog to the Panuco project, as they are both epithermal vein systems that are underground mine projects. Another catalyst that they have is Panuco has several other veins and targets for drilling. To date, they have only focused on drilling a few of the many veins on their large property. Plus, they have added nearby projects that are highly prospective. They've done a wonderful job at acquiring an impressive portfolio of ground and have peer-leading statistics in their PEA that are hard to find in development stage high-grade silver projects. Their team is loaded up with mine builders, and in the long term, they can use Panuco to build a much larger silver mining company with organic growth and through M&A. In the technology industry, unique companies are called unicorns, and Vizsla Silver has the potential to become a silver unicorn. All right. Next up, and this is a one in its category, and that is Goliath Resources. Okay, let's pick up Goliath here. Where are we? We're going to get their Toronto listing. Let me do it this way. .d. There it is. Oops, got the wrong company. Deere and Company, a little bit bigger than Goliath. All right. Here's Goliath. Okay. I first started following this company in my reports when they were about 60 cents a share, back in around here somewhere. And they've done really well since then. They're currently trading at $2.37. Okay. So I often say that investors in gold stocks would do well to invest in gold explorers with important discoveries. In this category, it is a group of one for me, as Goliath is my highest conviction gold explorer with an important discovery. There are certainly other gold explorers with important discoveries, but I'm not a stock picker that shoots with a shotgun, as I prefer to hunt picks with a rifle. That is evident from the categories above or earlier. As you can see, I only make two or three picks in each category. I will leave the scattershot approach to others, as I'm not a fan of diversification and appreciate the approach of picking carefully to reduce risk and then following picks closely. What makes me comfortable to have only have Goliath Resources in this category is the incredible high grade discovery they have made at their sure bet discovery in the Golden Triangle of British Columbia. A few years ago, it started out as a discovery of gently dipping, stacked, high grade gold veins that has geological similarities to the Pogo mine in Alaska, which is one of the great North American gold mines. Uh, then last year, it became apparent that the vertical reduced intrusion related gold or RIRG dikes were also carrying high grade gold. This was a bit of a geological surprise because the conventional wisdom by researchers and explorers in the Golden Triangle was that these Eocene aged dikes were not prospective for gold. Randall Karcher and his team at the Colorado School of Mines took a look at the RIRG dikes and found that these dikes were in fact highly prospective for high grade gold when they did a detailed geological study. The findings in that study and assaying a small portion of the RIRG dikes in 2024 prompted the Goliath team to relog all the RIG dikes and other cores from previous drilling at the recent start of the 2025 season that has returned impressive results of high grade gold over substantial intersections in the core sent in from the relogging already this year. Another exciting discovery was finding high grade gold in a third rock package of altered breccia. More findings came out of the geological study at the Colorado School of Mines. One being that they used high-powered microscopes to look at the core with gold at the intersection of the gently dipping veins and the vertical RIRG dikes. What they found is that the gold comes from two temperature regimes, one hotter and one cooler. Randall Karcher coined these zones as Goldilocks zones, as everything is just right to have gold enrichment from both the gently dipping veins and the vertical RIRG dikes. This is tremendously exciting because there are a vast amount of intersections where the gently dipping veins, there's about 12 of those, and the vertical dikes crosscut, there's about 15 of those. So everywhere they crosscut potentially could be more Goldilocks zones. Um, and I say, which opens up the potential that there could be a remarkable amount of Goldilocks zones. Another important finding from the geological study at the Colorado School of Mines is that the high-grade gold in the gently dipping veins and vertical dikes are likely coming off a common magmatic intrusion. It is important to note that in the recent news release, when Goliath announced the high-grade gold in the third rock package, that Quinton Henney made an important statement. He is the geological and technical advisor to Crescat Capital, a strategic investor in Goliath, and he stated, and I quote, "It is remarkable to watch the Sherbet gold system reveal its secrets. 5 years ago, the initial target was the low angle, thick Sherbet gold quartz sulfide lode. After a couple drilling seasons, after a couple seasons of drilling, other similar flat gold quartz sulfide lodes were discovered stacked beneath the Sherbet, including the remarkable high-grade Bonanza gold quartz sulfide lode. In just the past year, recognition of a swarm of near vertical reduced intrusive dikes has added a new twist to the story because these appear to host significant volumes of stockwork gold quartz sulfide mineralization and importantly point to a direct connection of the Sherbet system to an intrusive gold source. Today, the revelation that significant high-grade gold mineralization is hosted by calc-silicite rocks that form the thermal areolae around a deep intrusion adds fuel to the fire. It will be interesting to see where the natural progression of discovery leads us, end quote. I highlighted in bold the part about the revelation. What I think is the part that speaks volumes about the potential to find the source of where all the gold in the three rock packages come from. This emphasizes the importance of the altered calc-silicate brecciated rocks as they could be sitting immediately above the source for the gold mineralizing system in the three rock packages. It is important to add that there is a very large geophysical anomaly sitting right below the third package of rocks and that they are drilling deeper holes this season. I'm keeping my fingers crossed that they tap into more Goldilocks zones, plus expand on the stacked gently dipping veins and vertical RIRG dikes. With a little luck, tag into the source of where all the high grade gold in the three distinct rock packages started their journey into the Sherbet high grade gold discovery. Okay, so that is all of my uh, current top picks. And now I have my bonus picks. All right, so the first bonus pick is a company that I've been following for a few years now, which is Blackrock Silver. As you can see, they have recently had a significant breakout and are currently just going through a golden cross. So, from a technical perspective, that's very bullish. All right. So, Blackrock Silver already has an impressive discovery of high grade silver gold at their Tonopah West project in Nevada. It also has the potential to grow the size that would make it an important silver discovery. They have completed a resource estimate showing 100 million ounces of silver equivalent. It's a combination of silver and gold with a grade of 492.5 grams per ton of silver equivalent in the inferred category. Their preliminary economic assessment has an after-tax internal rate of return of 39.2% using $1,900 gold and $23 silver. So both of those are significantly above that, with an all-in sustaining cost of $11.96 per ounce of silver and a 2.3-year payback of the capital cost to build the mine. They are on the verge of the discovery reaching the size that it could be a standalone mine, and they're currently drilling to increase the size of the resource and move ounces into the measured and indicated category. Based on what I expect to see from their current drilling, I can see them moving up to either a silver gold explorer with an important discovery or a developer with a high quality silver gold price project category. So I think this year they'll move up in my rankings into one of those two categories. All right. So that's the Blackrock story and why I like it as a pick now. See, oh, no, Canadian CGC dot V dot V. Okay, the next company is Canadian Gold Corp. Uh, and I'll note here that they went through a golden cross in March of this year. All right. Canadian Gold Corp is advancing their Tartan mine project near the town of Flin Flon, Manitoba. This is a past producing gold mine that was in production when gold prices were much lower than they are today. Their efforts are to expand the resources deeper than the previous operator that had drilled it down to. It is an orogenic gold system that has excellent continuity of the high grade. A lot of people say gold is or grade is king, but in reality, it's a combination of grade and continuity that is king. So these guys have high grade and excellent continuity. Orogenic gold systems have very deep roots. They can go down for thousands of meters. An example is the mine in Red Lake, Ontario, that made Goldcorp famous. Rob McEwen built Goldcorp from a tiny junior into one of the world's largest gold miners that was the lowest cost miner of gold under his tenure. He is also a key shareholder of Canadian Gold Corp. They are busy drilling to expand the zones on their project and have been hitting a lot of high grade gold and should have strong news flow for several months. They are close to being a company that I think could move up to the category of a gold explorer with an important discovery. All right. The next company in the bonus picks is Dryden Gold. As you can see, they also recently went through a golden cross back here in early May. All right. Dryden Gold is an explorer that is likely on the cusp of making an important gold discovery. Their project is near Dryden, Ontario, which has excellent access as they can drive from Dryden quickly right to the drill rigs in a pickup truck. Dryden, Ontario has all the same geological characteristics as nearby Red Lake, Ontario. They're looking for high-grade gold deposits in an orogenic gold system. My only complaints about the company is that they're spending a lot of time focused on testing the near the surface gold mineralization instead of rolling up their sleeves and testing the depth potential. And often when they do presentations, they talk about their exit strategy. That is putting the cart before the horse because first they need to make an important discovery before talking about an exit strategy. I do think they are likely to make an important discovery or more um, in their drilling this year. They have gained tremendous knowledge about the structural controls of the high grade mineralizing system. This will help them vector into sweet spots in the system, and then I hope they go all in on following those zones deeper. They still have a ways to go, but I can certainly see that they could turn into a company that I include in my gold explorers with an important discovery category. All right. Now we'll go to Uh, the next, the next bonus pick, which is Hercules Metals. Hercules Metals, I'm gonna go back here so you can see this big breakout that they made. Okay. Hercules Metals burst onto the scene a couple years ago when they were wildcat drilling a geophysical anomaly and tagged a porphyry system. It wasn't long after they announced their discovery hole that Barrick made a substantial investment into Hercules Metals. Since then, they have been drilling with good success, not the kind that drives stocks to the rafters, but it has given them key insights into the system. So they had that big run up on the on Barrick investing after the discovery hole, and then for the last year and a half, they've been pretty much going sideways. Where am I? Okay. Porphyry systems, like all metal systems, can be complicated. Investors often think you poke a few holes and find a mine. Mother Nature doesn't work that way. It almost always takes many holes and plenty of geological analysis to find a mine. Recently, they completed an important modeling exercise and deep penetrating geophysical surveys that have laid the groundwork for their current drilling. They have recently put out news releases to discuss what they are drilling into, assays are pending, and also about adding more rigs. Last year, they clipped the edges of a breccia that returned high grades of copper. My hope is that they get more holes into it for two reasons. Sometimes breccias coming off of porphyry can be high grade mines. And by following them deeper, these breccia units are, breccia is a broken up rock. Um, by following them deeper, it can lead to the porphyry that they came off of. From the sounds of what they're talking about in their recent news releases, they're liking what they're seeing. If the assays come back good to great, it certainly could revive the enthusiasm after their discovery hole when Barrick invested in them. Uh, this year, it looks like they could emerge to be added to my category of a copper explorer with an important discovery. Okay, now the next pick, I'll just tee it up here. Give me 1 second. And that company is Inventus Mining. I always mix up their stock symbol with a much bigger company called Ivanhoe. By the way, I'm going to probably make that a pick. That's Robert Friedland's company because that symbol's IVN, whereas Inventus Mining's is IVS. As you can see back here in October, they made a golden cross and have been doing very well ever since. Uh, Inventus Mining has a conglomerate gold project in Ontario that looks very promising. At their Pardo project, Inventus has an outcropping conglomerate that they have done bulk samples from in the past and are planning to do more in the near term. Usually, gold deposits need lots of deep drilling to find them, and conglomerate gold deposits can also go very deep. But in the case of their Pardo project, it starts right at the surface, which allows for extensive drilling to outline the deposit for bulk sampling for a very low cost. In any deposit, the larger the sample, the more representative the grade is. So they are in a wonderful position to be able to access the top of the system with shallow drilling and bulk sampling. Considering the size of the prize they are looking for, the company has a very low valuation and is an undiscovered gem with plenty of catalysts. There you go. I think they'll have catalysts for several months into the future and just keep moving forward from there. All right. Now I'll tee up my next bonus pick, which is Kootenay Silver. I actually first started following them. I think it was around here when they were trading at about 70 cents. They're currently trading at $1.38. I've done a couple of interviews with their one or two, I can't remember. You can find that on my YouTube at Rock. Just do a search on YouTube for Rocks and Stocks Rocks and Stocks News, and you'll find my channel on YouTube. All right. Kootenay Silver has an exciting high-grade silver discovery on their Columba project in Mexico. They have completed a resource estimate of 50 million ounces of silver, which makes it relatively small at this point, but is wide open to expand on the known veins and also in other veins on the project. The nice thing about parts of Mexico is that you can drill pretty much year round at a low cost relative to other locations throughout the world. Mining has been a key part of the Mexican economy for hundreds of years, so there is a robust amount of mining professionals in the country. The weather and access, plus a strong mining workforce, makes for lower cost when it comes to exploration and mining. At the moment, their focus is on expanding the resource, which I think they will have no problem doing. When they get to the preliminary economic assessment, I believe it will show a healthy internal rate of return, low capital cost to build, and a rapid payback of the capital cost to build a mine at Columba. There are not many silver-focused explorers to choose from, and I think as they increase the size of their resource, Kootenay Silver will become a company in my silver explorers with an important discovery category. All right. Now I'm going to go to my next bonus pick. Let me tee that one up, which is Norsemont Mining. They had their Golden Cross in late May and have recently had quite a significant breakout. Uh, for long-term investors in my audience, they will recognize that the name Norsemont Mining. During the last great metals bull market from 2001 to 2011, Norsemont 1.0 was a company that I picked early in their success, and they ended up being taken over at a large premium relative to when I picked them. They're in what I call my personal mining hall of fame. Mark Levy led Norsemont 1.0, and he has a project that looks like it could be a bigger success. Norsemont 1.0 found an important copper project that they advanced through to being taken over, and with Norsemont 2.0, it has a substantial resource of oxide gold, which is open, and they have a few holes into porphyry discoveries. The gold is in epithermal veins, which are known to have a porphyry source, that's the geological model, that caused the gold mineralization. So it sounds to me like they have the top of the epithermal veins coming off of porphyry and yet to find the rest of the veins in between, mainly because all the past drilling was primarily focused on drilling the near surface oxide gold. My guess is that the entire system of veins coming off of porphyry is intact. I'm very much looking forward to their next rounds of drilling to focus on the entire system. A few days ago, I did an interview with Mark Levy in which we discussed the company at length. It is a great way to start your homework on Norsemont 2.0. if you see this report and you go to my Substack at rocksandstocks.substack.com, there's a link in there for that interview with Mark Levy just from a few days ago. Or you can also go on my YouTube, go to YouTube and just search for Rocks and Stocks News, and you'll find my YouTube channel and the interview I did with Mark Levy. All right. I think this is my final bonus pick. Oh no, I have two more. Special, special offer for you. All right. So let me queue up my next bonus pick, which is a company called Kumbaya Gold. Kumbaya Gold. And they are, let me been kind of going sideways. They had a golden cross here in early April and have been firming up late, or have been kind of going sideways with a recent breakout. And part of the reason for that breakout is they were able to do a financing, I think it was for about $4 million Canadian. And what's important about that is that they brought it in from a handful of investors, including one of the guys that was instrumental in making uh, Colombia a destination for exploration. And he's had a lot of success in Colombia, and that's where Quimbaya Gold is. All right, let's go on. Quimbaya Gold has a large and prospective land package right beside the Segovia gold mine operated by Aris Mining, which is a tremendously successful gold mine. In a general sense, the best place to look for a highly successful gold mine is right beside one, and that is what Quimbaya has at their Tahami project. What makes their project compelling is that the network of veins on the Segovia project continues right through Cumbaya's project. Like Segovia, the local miners have done the surface work that helps an explorer hit the ground running, and that is also the case for the Tahami project. The geological team at Quimbaya will be have done the groundwork to prepare for their first ever drilling at their Tahami project, which will be underway very soon. I think it's within days, actually. I will be interviewing the company in a couple of days, which will give me a better chance to dig deeper into the preparation work and their drilling plans. I'm looking forward to that interview to give viewers a better understanding of the exploration of plans, and of course, excited about their upcoming drilling. Stay tuned for the release of that interview with their CEO and a key member of their geological team. I believe that interview is scheduled for Tuesday, just a couple days from now. So either register to be a subscriber to my reports on my Substack. Once again, that's rocksandstocks.substack.com. And that's where you can get all my reports, whether they're video or written reports. All right. So now we're going to get into my final bonus pick, which is Rackla Metals. Alrighty. They had their golden cross back in January, February, March, the 3rd, right there. And recently they've had a very big move, breakout off of that 50-day moving average and are trading quite significantly above their 200-day moving average. All right. So Rackla Metals stock has come to life of late as they have put out news of their exploration efforts looking for a reduced intrusion related gold system, or RIRG. at their project in the Northwest Territories, Canada. They have several outcropping veins that they have sampled, which return very good grades of gold. The next important step is to drill into the cluster of veins to see the gold grains or gold grades under the surface. I've looked at the images of the target area, and it sure looks like they could have many veins in more than one part of the target area. So they've got a mountain that they've kind of been focusing on one side of it. Looks like the veins are on the other side and in across the valley as well. Snowline Gold has had a remarkable success with their RIRG system in the Yukon, which is part of the same geological district that extends over into the Northwest Territories where Rackla's project is. I'll be watching this company very closely as I like their chances of finding a reduced intrusion related gold discovery. And if they do, there will be plenty of investors paying attention due to Snowline's success. That stock a couple of years ago was like 50 cents, and I think it's $8.50 now because of finding a very good, well, one of the best maybe ever RIRG or reduced intrusion related gold systems anywhere. And so they're looking, Rackla is looking for another one. Okay, let's go back to the metals so I can close this show off. And we'll go to gold because it's doing good. In the futures market is open and they're up $21. Gold up $21 an ounce. I hope you found this report helpful and informative. I would also like you to know that I've recently added a WhatsApp group for Rocks and Stocks News. If you would like to join, there's a link in this written report that accompanies the video. I'll put it in the description in the YouTube, the link to that WhatsApp, and I'll also have a link to it in the written report on my Substack with this video. And you just scroll down and you'll find that link. And please enjoy it, join it because we're having great conversations in there about rocks and stocks. Okay, as always, do your homework, speak with your financial advisors before making any investment decision. I have some disclosures to make. I'm a shareholder of Borealis Mining, Goliath Resources, and McEwen Mining, which I talked about in this report. Amex Exploration, Borealis Mining, and Vizsla Silver are sponsors of Rocks and Stocks News. Content creation about them is for the benefit of the companies. Sponsors also benefit readers and viewers of the reports as it makes content creation possible for no charge to the Rocks and Stocks audience. Now, I do have to also thank I also have subscribers that are generously donated or sponsored my reports through my Substack. And if you'd like to do that as well, you can find the ability to do that on the Rocks and Stocks Substack, or you can also email me at rocksandstocksnews@gmail.com. And if you're in Canada, I think we could work out something to do an e-transfer. But if you're comfortable using Substack, please use that. Alrighty. Do your homework. Speak with your financial advisors. Have a great day. Oh, and remember, I'm only an idea generator. And I try to cover all the companies, whether they're a sponsor or not a sponsor, in the same fashion. The only difference is that sponsors, I do pay particularly close attention to them, so I may know their stories more inside out or more fully. So I tend to talk about them a little bit more. And I also do a series of interviews with them. But how I conduct my interviews and my written reports whether a company is a sponsor or not a sponsor, I try to cover them in the same way. But of course, I'm biased. In fact, I'm not just biased about my sponsors, I'm biased about every pick I make and every market call I make because ultimately I want to be proven right. And I have a tendency to be proven right a lot. I think I do it better than almost all of my peers, maybe all of my peers that cover this industry and also cover metals and the economy, interest rates, US dollar in on Wall Street. And if you doubt that analysis, just go to my Substack. All of my reports are easy to find on there. And if you can just look at the headlines and see how accurate I've been, and then read the reports, and you'll, I think, come to the same conclusion that I have. All right, that's it. Have a great day, and we will talk to you soon.